DeepSeek expands ambitions, 500 semiconductor engineers needed for in-house AI chip development. Date, February 14, 2025. Location, China. Overview. DeepSeek, a burgeoning AI startup in China backed by the stock trading firm Highflyer and led by Liang Wenfeng, is on a mission to disrupt the AI landscape traditionally dominated by giants like OpenAI and Google. In a bold move, DeepSeek has announced plans to recruit 500 semiconductor engineers to bolster its in-house AI chip development. This strategic hiring is indicative of its intent to reshape the existing AI infrastructure paradigm. Key developments and timeline. 1. Launch of DeepSeek V3 December 2024. DeepSeek made waves on December 26, 2024 with the launch of its first chatbot application, DeepSeek V3. The application showcased capabilities that rival those of leading chatbots from major tech firms, utilizing a mere 2,000 Nvidia chips, substantially fewer than the 16,000 chips typically employed by its competitors. 2. Market reaction January 2025. The market's response to DeepSeek's launch was swift and severe. Nvidia experienced a staggering drop of nearly 17% in market capitalization, equating to a loss of $593 billion in a single day. This sell-off reflected investor anxiety regarding DeepSeek's cost-effective approach, which challenged the assumption that high-performance AI systems necessitate exorbitant investment in specialized chips. 3. Cost efficiency claims. DeepSeek's engineers disclosed that their AI training system required only $6 million in computing power, approximately 10 times less than what Meta had invested in its latest AI technology. This revelation has raised significant questions about the sustainability of current AI chip expenditures, which are estimated at $50 billion quarterly by hyperscale cloud providers. 4. Geopolitical context. The rise of DeepSeek occurs against a backdrop of increasing technological division between the East and West, exacerbated by U.S. export restrictions on advanced AI chips. These restrictions have compelled Chinese companies to innovate within their constraints, potentially leading to advancements that could rival or even exceed Western technologies. 5. Future prospects. Fitch Ratings expressed cautious optimism regarding the semiconductor industry, predicting that a shift toward more affordable AI solutions could disrupt traditional chipmakers like Nvidia while benefiting the broader tech industry. However, there are concerns that DeepSeek's models may be better suited for inference tasks rather than the training of complex AI systems where traditional methodologies still hold value. Common themes and key differences. Disruption of established norms. Across all sources, there is a consensus that DeepSeek's emergence signifies a potential disruption in the AI landscape, challenging the belief that only substantial investments in specialized chips can yield high-performance AI models. Cost efficiency. A recurring theme is the emphasis on DeepSeek's capacity to drastically lower costs compared to its competitors, which could decelerate investments in AI infrastructure. Geopolitical dynamics. The sources converge on the notion that the U.S. China tech rivalry is shaping the pace and nature of AI development, with DeepSeek poised to benefit from constraints faced by its Western counterparts. Market reactions. While there is agreement on the market's volatility following DeepSeek's announcements, interpretations of the long-term implications vary. Some analysts view the situation as a temporary setback for companies like Nvidia, while others suggest it could herald a more permanent shift in market dynamics. Conclusion. DeepSeek's ambitious strategy to recruit 500 semiconductor engineers represents a critical step in its quest to innovate within the AI chip sector. As the company continues to challenge established norms, the implications for the semiconductor industry and the broader tech landscape are profound. The interplay of cost efficiency, geopolitical influences, and market reactions is likely to shape the future trajectory of AI development across both Eastern and Western markets. Additional insights from sources. Source 1, Reuters. according to a report from Reuters. DeepSeek's success in creating a competitive AI model with significantly fewer resources than typically required could indicate a fundamental shift in AI chip development. The article discusses how the company's strategy undermines the traditional belief that ultra-high-performance AI systems necessitate massive investments in specialized chips. Source 2: LGT Wealth Management. LGT Wealth Management highlighted the larger implications of DeepSeek's advancements, linking them to the ongoing decoupling of Eastern and Western technology sectors. The report notes that DeepSeek's emergence could be influencing broader market dynamics, particularly as it challenges the dominance of established players and reflects a shift in global technological power. Source 3: The Economic Times. The Economic Times reported on how DeepSeek's approach could force a re-evaluation of spending in the AI infrastructure sector, particularly affecting companies like Nvidia. The publication underscored the possibility of a more competitive landscape where lower-cost AI solutions gain traction, potentially altering the revenue growth trajectory for traditional chipmakers. Final thoughts. DeepSeek's aggressive hiring and innovative approach symbolize a significant shift in the AI technology landscape. As the company continues to push boundaries and challenge established norms, the potential for widespread disruption in both the semiconductor and AI industries becomes increasingly tangible. The future will likely see a redefined competitive landscape where cost efficiency and technological innovation dictate success in the rapidly evolving world of artificial intelligence. The content presents several counterintuitive insights regarding DeepSeek's rise in the AI landscape and its implications for the semiconductor industry. 1. Reduced dependency on high-end chips. Traditionally, the prevailing belief in the tech industry is that high-performance AI models require significant investments in advanced chips, often thousands of them. DeepSeek's assertion that it can achieve capabilities comparable to established players like OpenAI and Google using only 2,000 Nvidia chips challenges this assumption. This suggests that the industry may have overestimated the necessity of high-end infrastructure for developing competitive AI technologies. 2. Cost efficiency. DeepSeek's claim that its AI training system only required $6 million in computing power, significantly less than Meta's recent investments, contradicts the conventional wisdom that substantial financial investment is essential for cutting-edge AI development. This could shift the industry's focus towards more cost-effective solutions, potentially altering the investment landscape in AI infrastructure. 3. Impact of geopolitical dynamics. The expectation is that U.S. tech firms will maintain dominance due to their established technologies and resources. However, DeepSeek's success amidst U.S. export restrictions highlights how such constraints can inadvertently foster innovation and efficiency in competing markets, particularly in China. This suggests that geopolitical tensions might lead to unexpected technological advancements in regions typically seen as lagging behind. For market reactions, the dramatic sell-off in Nvidia's stock following DeepSeek's announcement reflects a significant investor shift in perception about the sustainability of current AI expenditures. This volatility indicates that the market may have been overly reliant on established companies and their growth trajectories, suggesting a potential underestimation of new entrants like DeepSeek, which can disrupt existing paradigms. 5. Long-term viability of current market leaders. While established companies like Nvidia have dominated AI chip manufacturing, the emergence of more efficient alternatives raises questions about their long-term viability. If DeepSeek's models prove effective, this could lead to a re-evaluation of the business models of traditional chipmakers who have relied heavily on high-end AI chip demand. 6. Potential shift in innovation hubs. The suggestion that innovation could emerge from countries like China and India as opposed to the U.S. Silicon Valley goes against the conventional narrative of tech dominance being synonymous with geographical location. This could lead to a more decentralized global tech landscape where emerging markets become significant players in AI and semiconductor advancements. 7. Inference versus training. Fitch Ratings caution regarding DeepSeek's models being better suited for inference rather than training tasks implies that while DeepSeek might provide an alternative for certain applications, it may not fully replace the need for traditional methods in complex AI training. This nuance suggests that the market's understanding of AI capabilities might be oversimplified, overlooking the specialized applications where traditional systems still excel. These insights imply a significant shift in the way the tech industry perceives AI development, chip manufacturing, and the geopolitical influence on innovation. As DeepSeek continues to challenge established norms, both the semiconductor industry and AI landscape might experience a profound transformation that contradicts long-held assumptions about technology and investment. The report on DeepSeek's expansion into in-house AI chip development and its ambitious recruitment of 500 semiconductor engineers is laden with implications that many may overlook but are significant for understanding the future of AI technology and global market dynamics. Here are some of those critical points. 1. Cost efficiency and disruption of established norms. DeepSeek's assertion that it can achieve advanced AI capabilities with significantly fewer resources than its competitors is a central element that many may dismiss as mere marketing hype. However, this claim challenges the prevailing belief that high-performance AI systems require extensive investments in specialized hardware. The example of DeepSeek utilizing only 2,000 Nvidia chips as opposed to the typical 16,000 raises questions about the sustainability of current AI chip expenditures, which are estimated at $50 billion quarterly by hyperscale cloud providers. If DeepSeek's model proves effective, it could lead to a re-evaluation of investment strategies across the tech sector, potentially reducing the financial barriers for new entrants and encouraging a proliferation of AI applications. 2. Market volatility and investor sentiment. The immediate market reaction, particularly Nvidia's nearly 17% drop in market capitalization, underscores the fragility of investor confidence in established tech giants. This sell-off indicates that investors are increasingly wary of high valuations in the AI sector, which may no longer be justified if alternative, cost-effective solutions emerge. The broader implications suggest a possible shift in market dynamics where traditional leaders may be forced to innovate rapidly or face declining market share. This situation is reminiscent of past tech disruptions where new entrants challenged established players, leading to significant shifts in market leadership. 3. Geopolitical implications and the East-West technology divide. DeepSeek's rise is set against the backdrop of increasing technological decoupling between the U.S. and China. The U.S. export restrictions on advanced AI chips have catalyzed innovation within China, forcing companies like DeepSeek to enhance their efficiency and capabilities under constrained conditions. This geopolitical tension is noteworthy. It suggests that the current environment could accelerate technological advancements in regions previously considered laggards. The report suggests that this could lead to a more competitive global landscape, where emerging markets like China and India challenge the dominance of established Western firms. Such dynamics could have long-term implications for global technology leadership and economic power balances. 4. The technological race and patent activity. The mention of patent activity is another critical angle that may not receive the attention it deserves. With China filing more generative AI patents than the U.S. over the past decade, this not only indicates a robust innovation environment but also suggests a potential shift in the global technology landscape. The correlation between patent filings and GDP growth implies that countries investing in AI technologies may experience accelerated economic growth, further enhancing their competitive edge. This could lead to a scenario where the U.S. finds itself playing catch-up in critical technology sectors. 5. Future of AI infrastructure spending. Analysts from Fitch Ratings express caution regarding the future of the semiconductor industry, predicting that a shift towards more affordable AI solutions could slow down traditional infrastructure investments. This caution could be significant for investors and companies who have heavily invested in high-end AI chips. If DeepSeek's model is successful, it may trigger a paradigm shift in how companies approach AI development, prioritizing cost-effectiveness and efficiency over sheer computational power. This shift could lead to a more diverse landscape of AI solutions, enabling smaller companies and startups to compete more effectively. 6. Open-source AI solutions and accelerated innovation. The report hints at the potential for open-source AI alternatives to flourish in the wake of DeepSeek's innovations. As companies begin to recognize that less expensive, less complex AI infrastructure can yield comparable results, the push towards open-source solutions may gain momentum. This could democratize access to AI technology, allowing smaller firms and independent developers to contribute to the ecosystem, which could ultimately lead to greater innovation and a faster pace of technological advancement. 7. Inference versus training capabilities. While the report acknowledges that DeepSeek's models may be more suited for inference tasks rather than training, this distinction is crucial. Many may overlook the significance of this limitation, but it highlights the complexity of AI development. Training large models typically requires substantial computational resources, and while DeepSeek may have identified a new approach for inference, the challenge remains in developing models for training that can match the capabilities of existing solutions. This could temper expectations of DeepSeek's impact if the company cannot demonstrate that it can also innovate in training methodologies. 8. Broader implications for the semiconductor industry. The potential disruption that DeepSeek poses to traditional chipmakers like Nvidia could have broader implications for the semiconductor industry as a whole. As companies explore alternative AI solutions, the demand for high-end chips may diminish, leading to an oversupply in the market and forcing prices down. This could have a cascading effect on the profitability of chip manufacturers and could reshape investment strategies across the tech sector. Conclusion: DeepSeek's ambitious plans and its challenge to establish norms in AI development carry significant implications that extend beyond its immediate technological advancements. The interplay of cost efficiency, geopolitical dynamics, market volatility, and the evolution of the semiconductor industry reflects a shifting landscape that could redefine the global tech ecosystem. Investors, industry leaders, and policymakers should closely monitor these developments, as they may herald a new era of technological competition and innovation with profound economic consequences. 1. Cost efficiency in AI development. DeepSeek's announcement of requiring only 2,000 Nvidia chips to achieve AI capabilities comparable to leading competitors alongside a training cost of just $6 million represents a significant challenge to the conventional wisdom that substantial investment in high-end AI chips is necessary. This claim could disrupt the existing financial models of AI chipmakers such as Nvidia and Meta, which have historically invested billions for similar capabilities. The implications of this cost efficiency could lead to a re-evaluation of capital allocation in AI development across the industry, potentially slowing the pace of investments in costly infrastructure. 2. Geopolitical dynamics and technological decoupling. DeepSeek's rise is set against a backdrop of increasing technological decoupling between the East and West, particularly influenced by U.S. export restrictions on advanced AI technologies. This context forces Chinese companies like DeepSeek to innovate under constraints, potentially culminating in advancements that could rival or surpass Western technologies. The geopolitical landscape is shifting, and as China and other emerging markets enhance their technological capabilities, this could lead to a significant realignment of power within the global tech industry. 3. Market reactions and investment sentiment. Following DeepSeek's launch and its claims of cost-effective AI development, the stock market experienced a dramatic reaction, notably with Nvidia losing approximately 17% of its market capitalization in a single day. This highlights the fragility of investor sentiment and the high stakes involved in the competitive AI landscape. The market's response also underscores the potential for emerging players to disrupt established giants, causing investors to reassess their strategies and diversify their portfolios to mitigate risks associated with concentrated investments in a few dominant firms. For long-term viability of AI models, while DeepSeek has garnered attention for its cost-effective approach, analysts express caution regarding the long-term viability of its AI models, particularly in terms of their suitability for complex training tasks. Fitch Ratings notes that while DeepSeek's innovations may challenge the current landscape, the models might be better suited for inference tasks rather than for training sophisticated AI systems. This raises questions about the sustainability of DeepSeek's approach and the potential for it to maintain competitive parity with established players in the long term, highlighting the ongoing debate about the future direction of AI development and infrastructure investment. Here are three famous historical cases that reflect similar themes of technological disruption, market volatility, and geopolitical influences as seen in the case of DeepSeek. 1. The rise of IBM and the decline of UNIVAC, 1950s to 1960s. During the 1950s and 1960s, IBM emerged as a leader in the computer industry, largely displacing earlier competitors like UNIVAC. IBM's introduction of the IBM 7030 Stretch, which was marketed as the world's fastest computer, showcased a significant leap in technology. The company's strategic investments in research and development, combined with its vast marketing power, allowed it to dominate the market. UNIVAC, despite having been the first company to produce a commercial computer, struggled to keep pace with IBM's innovations and aggressive pricing. This shift in market dynamics led to significant changes in the computing landscape, similar to how DeepSeek's innovations are disrupting the AI chip market today. The competition and eventual decline of UNIVAC illustrate how a single entity's technological advancements can reshape an entire industry, prompting established firms to reassess their strategies. 2. The advent of digital photography and its impact on Kodak, 2000s. The rise of digital photography in the early 2000s marked a pivotal moment in the photography industry, leading to the rapid decline of Kodak, a company that had dominated the film market for over a century. Kodak was slow to adapt to the digital revolution despite having invented the first digital camera in 1975. This hesitation allowed competitors to seize market share with more innovative and cost-effective digital solutions. The resulting market disruption caused Kodak to declare bankruptcy in 2012. This case parallels DeepSeek's disruption of the AI chip market, where established players face challenges from emerging competitors who leverage new technologies to offer more efficient and affordable solutions. 3. The rise of personal computing and the fall of mainframe dominance, 1980s. In the 1980s, the introduction of personal computers, PCs, fundamentally changed the landscape of computing. Companies like Apple and IBM began to dominate the market, leading to the decline of mainframe systems that had previously been the standard in businesses. The ability to produce affordable and powerful PCs that could perform many of the same functions as mainframes led to a shift in how organizations approached computing. This transformation echoes DeepSeek's challenge to traditional AI chipmakers by introducing cost-effective alternatives that leverage fewer resources for similar or superior performance. The shift from mainframes to personal computers illustrates how innovation can disrupt established markets and lead to new industry leaders, akin to the impact DeepSeek may have on the semiconductor landscape. These historical cases highlight the themes of technological innovation, market disruption, and the consequences of geopolitical factors that are also evident in DeepSeek's pursuit to reshape the AI chip industry. Future outlook. Predictions for DeepSeek and the semiconductor industry. DeepSeek's recent announcement of hiring 500 semiconductor engineers to develop in-house AI chips positions it as a formidable competitor in the AI landscape, particularly against established giants like Nvidia and Google. The implications of this move extend far beyond the company itself, potentially reshaping the future of the semiconductor industry and the broader technology landscape. Here are several predictions based on current trends and developments. 1. Increased competition in AI chip development. DeepSeek's entry into the semiconductor space could catalyze a wave of innovation and competition. If DeepSeek can demonstrate that high-performance AI models can be built with significantly fewer resources, other companies may be compelled to follow suit. leading to more affordable AI solutions. This trend could disrupt the traditional reliance on high-end chips which have dominated the market. Expect to see established players like Nvidia adapt by diversifying their product lines and investing in cost-effective solutions to maintain market share. 2. Shift towards cost-effective AI solutions. As DeepSeek has asserted, the ability to create powerful AI systems with reduced computational resources could change the economic dynamics of AI development. This shift may prompt hyperscale cloud providers who currently spend approximately $50 billion quarterly on advanced AI infrastructure to re-evaluate their investments. Companies in the tech industry may prioritize cost efficiency, leading to a broader adoption of budget-friendly AI technologies and potentially slowing down the pace of investment in high-end AI chips. 3. Impact of geopolitical tensions on technology development. The ongoing U.S. China tech rivalry will likely continue to influence the pace and nature of AI and semiconductor development. As export restrictions tighten, Chinese firms like DeepSeek will be motivated to innovate within their constraints, potentially leading to technological advancements that could equal or surpass Western capabilities. This could result in a bifurcated technology landscape where Eastern companies thrive on lower-cost efficient solutions while Western firms remain entrenched in high-cost high-performance paradigms. 4. Emergence of new innovation hubs. As companies like DeepSeek challenge the status quo, we could see the emergence of new innovation hubs outside of traditional tech centers like Silicon Valley. Regions such as China and India, which are heavily investing in AI and semiconductor technologies, may become focal points for technological advancements. This geographic diversification will foster a more competitive global landscape, encouraging innovation across various sectors and regions. 5. Potential consolidation in the semiconductor industry. The anticipated disruption in the semiconductor industry could lead to a wave of consolidation as companies seek to leverage synergies and streamline operations in response to changing market dynamics. Smaller firms that can innovate in cost-effective chip solutions may attract investment or be acquired by larger companies looking to enhance their capabilities. This consolidation could result in a more competitive market landscape where a few key players dominate while still allowing room for emerging startups. 6. Focus on inference over training. Fitch Ratings has noted that while DeepSeek's models may excel in inference tasks, traditional methods will still hold value for complex AI training processes. This duality may lead to a bifurcation in AI development strategies where companies focus on optimizing for either inference or training. As a result, we may see a rise in hybrid models that leverage the strengths of both approaches, creating more versatile AI solutions. 7. Increased investment in R&D for semiconductor efficiency. As the demand for more efficient AI solutions rises, expect to see an uptick in research and development focused on semiconductor efficiency. Companies will likely invest in developing new materials and technologies that reduce power consumption while maintaining performance. This shift will not only benefit AI companies but also have broader implications for sustainability and technology as energy-efficient chips become increasingly critical. 8. Market volatility and investor sentiment. The market's reaction to DeepSeek's initial announcements underscores the volatility in the tech sector, particularly in AI and semiconductors. Investor sentiment will likely remain cautious as they assess the long-term implications of this competition. Companies heavily reliant on high-cost AI chips may face pressure, leading to fluctuations in stock prices and market valuations. The overall tech market could see a rotation as investors seek more diversified portfolios to mitigate risks associated with reliance on a few dominant players. Conclusion. DeepSeek's ambitious plans to develop in-house AI chips mark a significant turning point in the semiconductor industry, reflecting broader trends in cost efficiency, geopolitical dynamics, and competition. As this narrative unfolds, we can expect to see a more diverse and competitive landscape in both the AI and semiconductor sectors. The interplay of innovation market forces and geopolitical considerations will shape the future of technology, potentially leading to groundbreaking advancements not only in AI but across various industries reliant on efficient computational solutions.